All right, what's up, guys? Today I want to talk to you about a simple three-step strategy that I use to find good value stocks. Okay, this is for the beginner. This is just for somebody that wants to be in the stock market. You know you should be invested. You want to invest. Where do you start, or how do you find stocks without being, some crazy obsessed investor? And this has worked very well for me. Now, before I jump into this, remember, I've been, you know, trying to beat the market since I was a young teenager. And I've tried everything I can come up with as far as, strategies. I've done a lot of short-term trading, long-term trading. I've gone chasing down CEOs and their track records and earnings per share and price to earnings ratios, and digging into like trying to figure out like what's the future of this company. And I mean, it goes on and on. You can look at data forever on every company, and in the end still be like, not sure if it's going to beat the market, right? It's hard. It's difficult. So I'm going to show you the simplified version, which, funny enough, this has actually been one of my most successful strategies for finding and earning money on stocks. And it's very, very easy. So pay attention, okay? So we're gonna start with charts. We're gonna look for good charts that show positive growth over the last 5 years, 1 year, and 6 months. Okay, so now the benchmark, we're gonna use S&P 500. So if you look at an S&P 500 chart, I'll pull it up for you guys on YouTube. Look at the S&P 500 chart. It's got this pretty much consistent growth over time, right? There's a few dips that are clearly those recessions. You can see where COVID hit and it had a massive drop, quickly recovered. If you go out farther, you go to like a 20-year chart, you can see where the 2008 recession was and things like that. Now, one thing, as you look at these long-term charts, you can see that the growth is pretty much positive over time. And those times where we saw like this massive recession and it was chaos for a while, like in 2008, at least for me, it felt like chaos. Those are simply little blips on this chart, right? When you really expand it out. And so that's what we're shooting for, is long-term investment where we're just going to catch the growth of the market. So the S&P 500 is the benchmark that we're comparing all companies to. Now, I'm actually going to throw a caveat on that in there and say Microsoft, there's many other good ones, but I'm going to say Microsoft is the gold standard for a good looking chart, one that we see as attractive. So let's pull up Microsoft here. And for you guys on the podcast or whatever, I am using the app in my cell phone for most of this. I use TD Ameritrade, and it's very simple. So I'm going to go to Microsoft charts. We're going to start with the 5-year chart, and I'm actually going to add a comparison. I'm going to compare it to the S&P 500. As I look at the S&P 500 compared to Microsoft's chart is very consistently up month over month, quarter after quarter. There's very few real dips or flats in there. It just goes up, 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 up. And there's a few little bumps, but that's to be expected in any company, much less, one that spreads so many different industries and can be affected by a lot of things, but it also has a lot of effect, right? So it stabilizes it as well as creates opportunities and vulnerabilities. So Microsoft, this chart is beautiful. It's amazing. Okay, so that's the gold standard that I'm going to use to compare other companies. I'm going to compare them to the S&P 500. I'm going to compare them to Microsoft. But let's start with Microsoft versus the S&P 500. If we look at this 5-year chart, the S&P 500 grew something about 115, 120% over the last 5 years. Microsoft grew 428% over the last 5 years. So we outperformed by 300 plus. Go to the 1-year chart. They've actually performed very similarly over the last year. S&P 500, I believe, is at 40 and Microsoft at 37. And then 6 months, Microsoft 25.38 and the S&P 500 at somewhere around 17%. So you can kind of say like, okay, typically Microsoft is outperforming the S&P 500. That's a good chart. I'm gonna kind of keep my eye on this. So step number 2, we're gonna go to overview, scroll down a bit, and we're gonna look for the short interest. Now, I did an episode on this a while ago. What is a short sell? How does that work? How does it affect the market? It's kind of the opposite of betting on a stock going up. You're actually betting on a stock going down. You're selling shares you don't own today, and you have to buy them back. So you're hoping that the price drops so you can buy them for cheaper than you sold them. Instead of buying and selling high, you're selling and then buying low. That's how that works. So short interest, that's the number or percentage of people betting against this stock. If we look at Microsoft, short interest, 0.64% of float as of June 15th, 2021. And so, and we're in July, like the 10th or 11th of July right now. So within a month, right? Short interest is less than 1% of people are betting against Microsoft. Now that's quite low. There's almost every stock has some people that are short on it. So just for comparison's sake, I'm going to jump over to like Boeing, which has been a historically solid stock to own, right? And it is a short interest of 1.71%. So also quite low. Let's go look at Coinbase, something kind of newer, a newer industry that we're looking at. That's a 3% short interest. And, there's a whole bunch of others. We could go look at Schrodinger. I don't know, just a random stock. Short interest, 9.1%. So approaching 10% short interest. So that starts to raise a red flag for me. I'm like, okay, there are too many people short on this. What's going on? Why are so many people betting against this company? And that's not ridiculous. 10%. A lot of companies have 10%, but I'm trying to find the secure ones. I'm trying to find the good growth, low short, and then positive ratings. So that's what we'll go to next. So if they start approaching 10%, I usually avoid them. So just kind of, you can look through lots of stocks and look at the short interest and try and sort of gauge like, okay, what is a good percentage of short interest that would maybe say, I want to avoid this stock. So last step, we're going back to Microsoft and we are going to go to the ratings tab built in here. Now, this is really where what takes all the research part out of your hands. You don't have to go chasing around all these different metrics and figure out which ones matter and if the company's going to do good or bad or solid, if it's going to beat the market, whatever. Built into this platform, as well as basically every other stock exchange platform, they have the rating systems, and these are not affiliated with TD Ameritrade. They're just rating systems they put in here. So you've got research team, you got the CFRA, you got the Street, Market Edge, and Ford Equity Research Company. So there are 5 different research companies that are rating stocks. Not every stock has a rating by all companies because they're all kind of independently looking for companies that they think are relevant, that they, so Microsoft, obviously a big company that's done well. A lot of companies are sort of saying like, okay, where's Microsoft going to go? But across these 5, I'll just break them down. Research team has accumulate, hold, or reduce, and they've marked it as hold. So let's say neutral. CFRA, they have a 5-star down to a 1-star, and they've marked it a 5-star. So that's a positive. The Street, they have buy, hold, sell. They've marked it buy. So that's positive. Market Edge, long, neutral, avoid. They've marked it long. That's positive. And Ford Equity Research, they're a 1 out of 5. They've marked it 3. So they're neutral. So out of the 5, we've got 2 neutrals and 3 positives, as positive as you can be. So essentially, nobody in these research teams is saying avoid this stock. So if we look at the 3 things, we got a really beautiful chart that outperforms the S&P 500 pretty much consistently over 5 years, same on last year, and beats it over 6 months. I'm going, okay, that's a nice chart. We look at the short interest, almost no one's betting against it. We look at the ratings, basically all 5 of these large rating companies, research companies are saying, hey, go for it, buy the stock. So when all 3 of those things align, that's a buy for me. And it's as simple as that. We've basically taken all the steps. So let's go back to Boeing just to kind of have a comparison. So let's compare Boeing to the S&P 500. Well, over the 5-year chart, they've done slightly worse, 81% growth versus, that 110 or so for S&P 500. They've done slightly worse on the year, and they've done slightly worse on the 6 months. So I'm kind of going, the chart's not too exciting. Probably don't want this stock. But for the sake of playing this out, short interest 1.71%. Not too many people betting against it. Let's go to the ratings. Research team has reduce. CFRA has it a 5-star, so that's a positive. And then the street says sell. The market edge says avoid, and Ford Equity says neutral, 3. So out of these 5, there's 1 positive, 1 neutral, and 3 negatives, do not buy. So based on the chart and the ratings, I'm saying don't want it, right? It's that simple. And using this simple strategy, I have literally made tens of thousands of dollars in the stock market. You don't have to be a genius to beat the market if you just buy companies that everyone says is going to beat the market. Now, a lot of this is controlled by big money, right? A lot of the smart money, as they say, where they have research teams, they have people in place to try and beat the market. And when they rate it as beating the market, it reflects in the chart. So that's another piece of why the chart kind of collaborates there with it. And then short interest, a lot of the hedge fund managers are the people that really go short on a stock because they've got some insight that are saying, the books are out of balance. The future looks bleak. I think it's overpriced. Let's bet against it. So, if those three things align, those are buys in my book, and it has been a very good strategy for me. So I hope this helped you as a, kind of minimalist investor or a beginner to get you started, a way to find safe bets using, research from big money and corporations that know the game. So if you got some value from the video, please, give it a like, subscribe to the podcast, the YouTube channel, and we will catch you guys on the next one. Bye.